Good evening, everyone. Thanks for taking time out and joining this call. It gives me great pleasure to be part of this call to share an update on the global as well as Indian scenario on the sugar and also explain the Q3 performance of the company. On the global front, for the season 21-22, overall the production is expected to match the consumption level. Brazilian crop is expected to be around 546 million metric ton, expecting a production of sugar of around 33.7 million metric ton, and also 25 billion liters of ethanol as per Platts. There is expected to be increased crop in Thailand, close to around 10.8 million tons is the expected production. Indian crop also is expected to be around 31.4 million ton as per ISMA. And the good news is that there is going to be an increased diversion of sugar to ethanol to the extent of around 3.5 million metric ton. With all these things happening and the mills already having contracted close to around 6 million tons equivalent for exports, the end of season closing stock for India is expected to be somewhere around 6.5 to 7 million metric ton. That means around 3.5 months equivalent of stocks. Technically, that should augur well for the domestic prices. However, as we speak, I think the subsequent year is expected to be another 10% improvement in the sugar output, which can also have a cane output as well as sugar output, which can also have a depressed effect on the sugar prices as we move forward. While during the year there has been no increase in the MSP for the sugar. However, after the increase in the FRP equivalent, the ethanol prices also have been increased by the government for the current alcohol year. For the sugar syrup, it has moved up by close to almost 80 paise, and for the from 62.65 to 63.45. For the ethanol made out of B heavy, it has moved up from 57.61 to 59.08 per liter. For ethanol made out of C heavy molasses, it has moved up from 45.69 to 46.66. Coming to the standalone performance of the company for the quarter ended 31st December 2021, the revenue from the operations for the quarter ended 31st December 2021 was 686 crores in comparison to the corresponding quarter of the previous year of 439 crores. Earnings before depreciation, interest and taxes, EBITDA and before exceptional items for the quarter was around 72 crores in comparison to the corresponding quarter of previous year of rupees 31 crores. Standalone profit after tax for the quarter was rupees 18 crores as against the 339 crores in corresponding quarter of the previous year. Point to note is the 339 crores of the previous year includes the profit from the sale of Coromandel International shares of rupees 464 crores. Net, there is an improvement compared to the previous year for the current year. Also, the standalone performance for the 9 months ended 31st December 2021, the revenue from operations for the 9 months ended 31st December 2021 was 1574 crores in comparison to the corresponding period of previous year of 1460 crores. EBITDA before exceptional item for the 9 months ended 31st December 2021 was 183 crores as against 262 crores in the corresponding period of the previous year. Standalone profit after tax for the 9 months ended 31st December 2021 was 58 crores as against the 696 crores in corresponding period of the previous year. Once again, the 696 crores of the previous year includes the profit from sale of CIL shares, almost equivalent to 827 crores. Net, the performance has been far better than the previous year for the YTD 31st December 2021. Now I request our CFO to explain to you on the segment-wise financial performance. Over to you, Mr. Sridhar.
Thank you, Suresh, and good afternoon to you all. I'm extremely happy to be a part of the analyst call and share key information of the operational and the financial performance of the company. While Suresh presented about the industry perspective and the financial performance of the company, I would actually like to provide the key operational parameters segment-wise. I would like to start with on the sugar operational parameters. For the quarter 3, all the factories of sugar was in operation, and the quantitative details with regard to sugar operations. To start with, on the crushing, we crushed about 16.17 lakh metric tons when compared to the corresponding quarter of previous year of 12.39 lakh metric tons for the quarter. Year to date, we crushed about 24.23 lakh metric tons when compared to corresponding quarter of previous year of 22.21 lakh metric tons. On the recovery was 9.29% compared to last year, the corresponding period at 10.46%. The quarter 3 recovery was little lower compared to the previous year, mainly due to the continuous rainfall in the southern states. Year to date, the recovery was 9.13% compared to last year, the corresponding period at 9.38%. The production for the quarter 3 was about 1.50 lakh metric tons against the corresponding period, which was at 1.30 lakh metric tons. On the year-to-date numbers, the production was about 2.21 lakh metric tons during the 9 months, and, against the corresponding period, which was 2.08 lakh metric tons. The cane cost for the quarter was at 3,350 per metric ton compared to last year same period, which was at 3,204 per metric ton. On a year-to-date basis, the cane landed cost is about 3,231 per metric ton, as against the last year number of rupees 3,053 per metric ton. On the sales volume, for the quarter 3, we did a sales volume of about 1.31 lakh metric tons, which included domestic 92,000 metric tons and an export of 39,000 metric tons. And in the previous year, we did about 84,000 metric tons. In that, the domestic was about, the entire sale was from domestic. In the last year, there was no export sales during the quarter 3. On a year-to-date basis, we did a sales volume of about 3.11 lakhs metric tons. In that, the domestic was about 2.29 lakh metric tons, and export was about 82,000 metric tons. This is previous year sales volume of 2.94 lakh metric tons, and that the domestic was about 2.20 lakh metric tons, and export was 74,000 metric tons. On the selling price for the quarter, average selling price was about 35 rupees 25 paise per kg, as against the previous year number of rupees 33.78 per kg. Domestic selling price for the quarter was rupees 35.85 against the previous year of 33.78. And on the export, the selling price for the quarter was about 33.84. The closing stock as of December was about 1.65 lakh metric tons. The revenue from sugar was 489 crores in current quarter, as against corresponding period of previous year, which was about 302 crores, and there is an increase of almost 62% compared to the previous year same quarter. On a year-to-date basis, the revenue was about 1,144 crores, and the corresponding period in the previous year was about 1,088 crores, which is an increase of 5% over the previous year. On the cogen operations, the power generation for the quarter was about 1,244 lakh units, as against the previous year, which was 984 lakh units. And this power generation increase is mainly to do with the increased volume of crushing that was carried out in the quarter 3. On the year to date, the power that was generated was about 2,088 lakh units against the previous year same period, which was about 2,040 lakh units. On the exports of the power, we exported about 669 lakh units as against the previous year, which was at 526 lakh units. And on a year-to-date basis, we exported about 1,106 lakh units as against the previous year, which was at 1,102 lakh units. And on the power rates, the average rate recovered for the quarter was about 4 rupees 72 paise per unit as against 4 rupees 61 paise for the previous year. On a year-to-date basis, the power rate was about 4 rupees 17 paise per unit as against the previous year, which was about 3 rupees 84 paise. The revenue from cogen operations was about 49.51 crores as against the previous year, which was about 40.08 crores. On a year-to-date basis, the revenue from cogen operations was 76.94 crores compared to the previous year, which was at 71.46 crores. On the distillery operations, the sales volume for the quarter was about 264 lakh liters as against to the previous year, which was about 148 lakh liters. And on a year-to-date basis, the volumes that were sold was 568 lakh liters compared to the previous year, which was at 438 lakh liters. And the price realizations were at 56.16 per liter as against the previous year realization of 59.90 per liter. On the Nutra segment, the quarter 3 turnover was about 12.75 crores as against 22.04 crores in the previous year. The year-to-date turnover was about 54.38 crores as against 57.84 crores in the previous year. This reduction is mainly on account of reduced production due to inclemental weather conditions that were prevailing in the quarter 3. At the consolidated level, the nutraceutical business had an increase in revenue compared to previous year. Turnover was about 67.89 crores as against the previous year, which was about 56.13 crores. And on a year-to-date basis, the turnover was about 204.03 crores as against the corresponding period, which was at 187.97 crores. On the Parry refinery segment, the operating revenue was at 724 crores. For quarter 3, it was at 706.65 crores. The quarter had a loss of about 3.67 crores compared to the previous year, which was a profit of about 24.91 crores. The refined sugar production is about 1.59 lakh metric tons compared to last year, which was at 1.85 lakh metric tons. And the sales volume was at 2,28,000 metric tons against 2,70,000 metric tons in the previous year. On a year-to-date basis, the operational revenue is 1,294 crores compared to the previous year, which is about 1,748 crores. And the loss for the year from the refinery operations is about 40.52 crores as against a profit of rupees 19.56 crores in the previous year. The production for the 9-month period was at 3.89 lakh metric tons compared to the previous year, which was at 5,71,000 metric tons. The sales volume was 4,25,000 metric tons compared to the previous year, which was at 37,000. With this, I will leave the floor open for any questions which the operating team would be in a position to answer all those. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mayur Liman from Profit Mart Securities. Please go ahead.
Thank you for the opportunity. I just want to ask what is the outlook for the next quarter? How do you see quarter 4 now? Can you share your thoughts on that?
Can you please repeat the question? He's asking for what's your thoughts on quarter 4.
Okay. How do you see quarter 4 now? So can you share your thoughts on that?
Yeah, I think as we indicated earlier, the Karnataka and Tamil Nadu plant should be crushing definitely some 5 to 10% better crush in terms of cane compared to the previous year. I think the season in Karnataka is expected to last up to end of February. Tamil Nadu, the season will go up to first week of April. Plus, the entire up to end of March it will run. It will also spill over to April. Same is the case with Andhra as well.
Okay, sir. Thank you.
Welcome.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Anupam Goswami from B&K Securities. Please go ahead.
Yeah, hi, sir. Sir, if you can elaborate more on the refinery profitability. I see that profitability quarter to quarter has stayed flat, and where are we in the gross spend, and what's the outlook on this?
Suresh would like to.
Yeah, good afternoon, and thank you for the question. As far as the refinery segment is concerned, we had a couple of headwinds for this quarter in the form of the inflation on the fuel as well as the packaging material price, which we could overcome in order to come to a break-even or close to a break-even level. Well, the inflation on the fuel side, which is principally coal-based, continues to be there as far as the fourth quarter is concerned. So we are looking at ways to mitigate this impact. One of these, of course, is the sourcing of raw sugar. We used to source on an imported basis from Brazil, and now with availability of Indian sugar, that has been helping us in order to counter some of these inflationary pressures on the material side. So we wish to move and keep in positive territory as far as fourth quarter is concerned. And the demand side is quite strong as far as the refined sugar is concerned, so we should be able to keep the sales book running.
And so what is the spread currently?
Yeah, currently if you are looking on an Indian basis, we have spreads for immediate business in the region of around $50. But with the availability of Indians in terms of timing is not quite clear because of the fact that the total exports out of India may not be as high as what it was last year. But however, the parity in terms of Brazilian is not yet opened up.
Okay, so on a last quarter, we used to get about a guidance of like 40 to 45 spread per ton. Now, shall we expect an improvement to $50 now since 50?
Yes. For the current quarter as well as the third quarter, mainly because of the fact that we have been able to source on the Indian raw, there is an improvement in the spread.
Okay. But overall, your coal-based inflation would some way hit the margin.
Correct. That's really a strong headwind which we have to weather it out.
Okay. So my next question on the recovery rate that you mentioned, is that after diversion of, is that a net recovery rate? And in that case, how much are we diverting now?
This is a gross recovery, what I had mentioned. Yeah.
Okay. And how much we are diverting towards ethanol, and what is our ENA and ethanol breakup for this quarter?
The ethanol volumes, what we have produced during the quarter is about 207 lakh liters.
Yeah. Compared to last year?
Compared to last year, which was about 102 lakh liters.
Okay. And what is our ENA this time?
ENA is about, for the quarter, when we look at it, it is about 45% for the quarter.
45% of the total?
Yeah.
Okay. So now we have turned towards more of ethanol and less of ENA. Are we going to do that going forward?
Yeah, we have a contract with oil marketing companies, and we will be producing ethanol and selling to the oil marketing companies based on the agreements that have been signed with them. Yeah.
And some last question on the sugar side, we got some good improvement in the sugar margin, and I believe that's mainly due to the realization. But on the other hand, we also did some cost optimization and also shifted plant to Bagalkot. How sustainable is this margin going to be?
See, as the plants have been shifted to Karnataka, a location called Haliyal, the benefit comes in the form of better absorption of fixed cost, because these plants, the addition of the plant is in the existing premises. So in terms of cost, we should get some betterment as this new line is going to produce to the fullest capacity at Haliyal. That is the advantage we should get as we move.
I'm sorry, sir, I could not get you. There was some network issue, I think. Can you come again, sir?
The plants have not moved to Bagalkot. They have moved to a location called Haliyal. It was moved from Pudukkottai to Haliyal. And this is going inside the existing premises of the Haliyal plant. So we will be getting better absorption of fixed costs, because more or less the same structure and overheads will be applicable for the second plant as well, except for some incremental requirements. That means as a business, the benefit should flow in the form of better absorption of fixed costs.
Okay. And so our last 120 KLPT, that's some kilo unit, when are we going to commission? I mean, expected date?
Yeah, the project is underway and civil works and all have started just. And we expect it to hit the next alcohol year.
So can we expect by 15 to 18 months commission?
No, we are expecting it to hit by the alcohol year, I'm saying. That means that was fourth quarter of the financial year, we should be up and running.
Around November, December.
Okay. Thank you, sir. I'll join back in the queue.
Yeah. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Gautam Dedia from Nalanda Securities. Please go ahead.
Yeah, hi, sir. So just wanted to know a bookkeeping question. Any export subsidy that we still have to receive from the government for previous years?
I mean, the subsidies, at least 95% of the subsidies has already been collected. In the last few months, there has been a majority of collection which has happened, and the balance also should be received in about a week or 10 days time.
Okay, and that would be about 10-15 crores?
Less than that.
Okay. Sir, and what was the retail branded sugar volume for this quarter compared to year-on-year?
Retail volumes for the quarter was at around 55,000 metric tons. Year to date is 55,000, and for the quarter was about 19,000 metric tons as against 15,600 for the same period last year. That's about a 2% increase for the quarter.
Okay. Sir, what would be the general working capital cycle for this segment? Is it on a negative working capital cycle?
There is no working capital. The receivables it's on a cash and carry basis is where we actually do our retail sales.
Okay.
Except on institutional sales where there is a credit extended to the extent of about a month. Otherwise, on the retail, it is on a cash and carry basis.
Okay. Sir, just one last question. Just curious, in the nutraceutical division, have you had any talk with the government on any PLI scheme or anything? Because there have been some articles that have floated on suggestions. So just wanted to know if you all have heard anything or any progress on that end.
Suresh, this side, we have Mr. Srikantan, our business head of nutraceuticals, joined the call. Mr. Muthu Murugapan is unable to attend the call. He will be replying to your question.
So, can you repeat your question? You were talking about PLI, some incentive or...
Is there any talk of any PLI? Because we've seen it in FMCG. Just curious if there's anything happening on the nutraceutical end.
So while we are already invested a good amount of capital in our existing nutraceutical business, at least in the near immediate future, we are not contemplating going to government for any PLA on this. Right.
Okay. Thank you, sir.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Kashyap from Broadview Research. Please go ahead.
Hi, everyone. I missed the operating data given out by Mr. Sridhar on the refinery. Could I please get it?
Sure. I'll do that, sure. The operating revenue for the quarter was 724 crores as against the previous year, which was at 706 crores. PBIT was a loss of about 3 crore 67 lakhs compared to the profit in the same period last year, which was at 24.91 crores. The production was about 1,59,000 metric tons compared to the
1 lakh?
1,59,000 metric tons.
Okay.
Compared to last year, which was at 1,85,000 metric tons. And on the sales volume, we were at 2,28,000 metric tons, and for the last year it was 2,70,000 metric tons. This is for the quarter.
Sure.
Would you want me to mention about the year-to-date numbers also?
No, that's fine. I am just curious to understand. I mean, you're mentioning about PBIT loss of 3.6 crore, but actually when you see console PBIT minus standalone PBIT, that actually shows up profitable, 10 crores close to. So could you just explain me how this is coming through? Because you have a console PBIT in sugar of 9.64 crore and loss of maybe 18 close to less than a crore or thereabouts. So how does this reconcile? This 3.6 crore loss.
I can come back to you, Kashyap, on this.
Yeah, because I'm just going by subtracting from your reported segmental results. So it's actually showing up as 10 crore profit in PBIT for the current quarter versus what we are saying of 3.6 crore loss. So I just wanted that.
We are talking about at the PBT level.
Okay. But PBT level, if there is a profit, how can there be a loss at PBIT?
On the consolidated basis, he's talking about.
Yeah, I mean, the consolidated profit is 9.64 crore. If it is PBT, it's 9.64 crore consolidated PBT from sugar.
Give me some time. I'll come back to you on this.
Sure. Okay.
Yeah.
Secondly, could you also provide me a breakup of debt, excluding Coromandel but consolidated EID, and how is distributed between the sugar operation and the refinery business?
Okay. Just to answer your question, the previous question, there is an intercompany interest which needs to get eliminated, because of which the consolidated, what you find in the PBT, what is shown here, what we have explained to you now and the consolidated numbers, what you see in the published, there is a borrowing between EID Parry and PSRIPL, and the interest is getting eliminated in the consolidation.
Okay. I will kind of take this offline and to understand in greater detail. But just to understand the debt number at the moment.
You mean for the company as a whole?
Yeah, I mean if you can give me a breakup of the debt in the in EID standalone and the debt at the refinery.
Yeah, sure. 1 minute. Yeah. The EID standalone debt, the long-term debt is about 104 crores, and the short-term debt is 202 crores as of December 2021. And as far as PSRIPL is concerned, the overall debt is about 953 crores, which includes the long-term loan of about 253 crores, 200 crores, and there is a short-term of about 100 crores, which is being given by EID Parry to PSRIPL. Totally, there is a borrowing to the extent of about 300 crores between EID Parry and PSRIPL. Yeah.
Yeah, but then this, so basically what you're saying is that 300 crore is long-term debt and the remaining is short-term debt, or it's, working capital debt.
Yeah, okay. 200 crores is long-term. Yeah.
200 crores.
100 crores is short-term.
Okay. Did I hear 953 crores?
Yes. It includes the working capital.
Correct. But then this 753 crore means how much inventory does it equate to? That's quite a bit of inventory, right?
Yeah, the raw sugar prices have also gone up compared to the previous year. As a result of which you are seeing a higher rupees crore number. And this is a 232 crore reduction from the second quarter to third quarter in terms of the debt. And we had a mismatch on the supply chain, basically because of the first 2 quarters of deferment of shipment. So as a result of which this mismatch in the supply chain resulted in a higher debt, short-term working capital debt in third quarter, which will come back to our normalized level. As you have seen the debt of the previous year, third and the fourth quarter, I think we will get back to that level.
So basically what you're saying is that we still couldn't ship a lot of inventory because of which this problem came through.
Correct. There were a deferment of supplies, and since we have been sourcing raw sugar from India, which has to be evacuated before the sugar year, and in terms of availability issues are concerned. So this will get normalized as we move into the fourth quarter.
Sure. And so any quantum of what the normalization would look like at the end of Q4? Like how much would we be able to draw this down by?
I think if the sugar prices continue to remain at the current level, I think we should be hoping to close the year with between 500 to 600 crores of debt total.
Yeah.
Total.
Yeah, total.
Sure. Okay. Thank you.
Welcome.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Rajesh Majumdar from B&K Securities. Please go ahead.
Yeah, good evening, sir, and thanks for taking my call. So I was wondering, did you mention that the gross recovery has fallen in 3Q? Because as per the data of ISMA, in Karnataka, the overall recovery has been going up this year, and both Maharashtra and Karnataka have had very good yields. So am I to understand that the gross recovery figure as of 3Q is like just a quarterly aberration?
See, for the month, for the quarter 3, because of heavy rains, in Andhra Pradesh and Karnataka, there has been a drop in the recovery. But subsequently, in the month of January, February, they have moved up quite well. Yeah.
Also, you have to look at the average gross recovery because Tamil Nadu and Andhra are sub 9 levels in the quarter 3.
Right, but if you could give us the figure for up to Jan 31st, because as of 31st Jan, I'm just reading out the ISMA data that Karnataka is up by nearly 12%, and even Tamil Nadu is up by a significant amount in terms of overall production.
I can give you a flavor of that. For example, we had, let us say, Tamil Nadu unit, which was around 8 to 8.5% recovery for the Q3. Currently, they are now running at 10.2 to 10.3. Andhra Pradesh unit, which was around 8.35, currently running around 10.6. And we have Haliyal units, for example, Karnataka units, which are in the range of 10.3 to 11.3. They are operating in the range of 12 to 12.8 now. So everywhere between Jan and Feb, the recoveries have started peaking as well.
That's very helpful, sir. That's very helpful. And overall, sir, for the area under cultivation, are we taking any steps in terms of, say, if you look at a 2-year time, the amount of cane crushed, are we looking at a different figure from what we are crushing right now? Is there a plan on these lines?
Yeah, actually, in Karnataka, the amount of cane crush is a function of the total cane availability in the area, because the capacity is limited. If there is going to be more cane availability, we are going to increase for more number of days, and then the availability is the crush is going to increase. As far as Tamil Nadu and Andhra is concerned, we are working on some improving the cane area by working along with the farmers. Maybe we can expect around 5 to 10% improvement in the cane area for Tamil Nadu and Andhra as we move forward.
So right now we are crushing, say, 400 crore kg approximately last year. What can be our target, say, in 3-4 years in terms of the cane crushing, in terms of targets? I mean, internal targets that the company is looking at? Because we have a substantial diversion towards alcohol. So in order to meet our sugar quotas, etc., we will need something like a 20-25% kind of jump in the overall cane crushing to be able to sell the same amount of sugar.
Currently, I think 2 things. Given a fixed volume of cane, we will try and maximize the alcohol out of that and reduce the sugar. Because any day making alcohol, ENA or ethanol is going to be relatively better for the business compared to the sugar. And hence any increase in further cane volume will be going into the sugar or alcohol, depending on further expansion projects as they come in the future point in time. So we can look at around maybe another 10% improvement in the cane volumes for the next 3 years time frame.
So our overall sugar sales will come down if we go to, say, alcohol of 14.
Correct. For a given volume of cane, we have to optimize the product mix. So that is best done when we maximize the utilization of the distilleries. And thereby there is a balance quantum is going as sugar, and that gets sold in the market.
And are we taking any steps to maximize the value on the alcohol? I don't know the amount of B heavy you've sold this quarter, for example. So I am assuming that out of the 55% alcohol you've sold, it would be predominantly B heavy, or is it still predominantly C heavy?
Yeah, it will be, you can see here, B heavy will be almost 25% of the overall for the YTD actual so far. And then syrup will be around some 10-15%.
And where do we see this proportion going in the years to come after the new distillery, etc., in say strategically over 3 years once the new distillery?
If you look at that, the new distillery is coming in, predominantly it will be in the form of syrup and B-heavy only. We are looking at something in Sankli. It will be during the season, the model will be like this. During the season, it will run on syrup because that is the best way it can be run. For example, our Boilcoat distilleries or whether it is Nellikupam distillery or Sankli, etc. During the off-season, you run with B-heavy or C, depending on the molasses plan, and also it also depends on the offtake. If you are in Tamil Nadu and all, if you are planning to sell it to ENA, then accordingly the product mix will be tweaked. You may make ENA out of C or ethanol from B-heavy. That is the way the product mixes are done as far as the distilleries are concerned.
But sir, the amount of demand, especially in South India in terms of ethanol, is right now unlimited because we see a state like Kerala, which is hardly any blending. So the opportunity in terms of ethanol is massive compared to the northern states where there is significant supply. So to that respect, doesn't it make more sense to make largely ethanol and reduce ENA in terms of the realizations, maximum realization for us?
Yeah, your point is right, sir. Tamil Nadu in terms of percentage of blending is lower. That is the reason we recently got the permission from Tamil Nadu government for production of ethanol out of the bee molasses and syrup. The first time in the history of Tamil Nadu this has been given. We have developed the flexibility of producing the ethanol from B-heavy or syrup in Nellikupam plant. I think you have to also keep in mind the sale of ENA from the C molasses also gives an equal contribution for us as compared to the B-heavy and ethanol, B-heavy and syrup-based ethanol. But still we bring in the flexibility during times of lesser realization out of ENA. We will be switching over to the production of ethanol out of B and syrup. That's the flexibility we have built it in Tamil Nadu.
So if I were to give you a figure of say 14 crore or something in the next 2 years or 3 years, what would be our breakup in terms of juice, B-heavy and ENA?
Now maybe we'll have to work it out. It also depends on what are the future expansions we are looking at. I think the product portfolio in a distillery should be kept as a overall realization in mind because it is not about only the overall contribution in mind. The component is not only the realization, it is also the cost of molasses which is also going to influence your total contribution. So the business will have the flexibility to decide on the optimal product portfolio mix which maximizes the contribution for the business. Hence it will be depending on the prevailing prices. For the same period last year in Tamil Nadu, ENA prices were rolling around 60 rupees. Nowadays it is rolling around only 55 rupees. So we have to be more dynamic and closer to the reality in terms of planning the product mix proposition.
Got it, sir. And my last question is in terms of your capital allocation. I mean, we are now in a very comfortable position of debt and we have one only expansion at Sankili going on, which is very comfortable. So beyond that, are we looking at any projects for the company?
As of now, we are just focusing on completing the Sankili project. We will be evaluating based on the opportunities which come our way in terms of ethanol and other products.
Yes, so it will be mostly on the ethanol side you're looking at. Is that correct?
Sorry?
Mostly on the alcohol side you're looking at expansion. Is that correct to assume?
Yeah, definitely it may not be in the other side. We will have to evaluate. Every evaluation will be based on the returns what the incremental investment is going to bring in.
Sir, if I can squeeze in one last question. The container rates have been now falling, we've seen now on a month-on-month basis. Will that be beneficial for our refinery business in terms of profitability?
Yeah, we are seeing the softening of the container rate, but if you look at from a last year perspective, the rates are still ruling higher, and we still have issues with respect to availability of boxes, especially on the East Coast side. So things are getting better, but not yet to be pre-COVID levels, I'd say.
But it's the fall in container rates over a period of time will be beneficial in terms of our refinery margins, right?
Yes, definitely.
Okay. Thank you. Thank you very much.
Thank you. The next question is from the line of Anupam Goswami from B&K Securities. Please go ahead. Mr. Anupam Goswami, your line is in talk mode. Please proceed with your question. As there is no response from the current participant, a reminder to all the participants, if you wish to ask a question, you may press star and 1 at this time. The next question is from the line of Anupam Goswami. Please go ahead. Mr. Anupam Goswami, may we request you to unmute your line from your end, please? Seems like we lost the connection for the current participant. A reminder to the participants, anyone who wishes to ask a question may press star and 1. Participants, to ask a question may press star and 1 at this time.
It doesn't look like you have
As there are no further questions, I would now like to hand the conference over to the management for closing comments. Over to you.
Thank you everyone for taking time out and then attending this call, and we'll be happy to meet you again along with the next quarter results and full year results. Thank you so much.
Thank you.